You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast coming to you from Montecito, California. Before we begin, I want to remind you, there's a website called wealthformula.com and lots of resources there. And one of the things that you might want to do there sooner rather than later, if you have not done so, go ahead and sign up for the Accredited Investor Club. That is, of course, if you're an accredited investor. And are you an accredited investor? Do you make $200,000 per year with a reasonable expectation of doing so in the future? Meaning that, have you made it in the last 2 years? Then you're an accredited investor. If you are filing jointly, that number goes to $300,000. The other option is you're an accredited investor if you have a net worth of $1 million outside of your personal residence. So if you are an accredited investor and you are feeling like you want to potentially take advantage of this distressed real estate market and some of the other things coming through Investor Club, go ahead and sign up for the Accredited Investor Club at wealthformula.com. Now, let's talk about today's show. Today's show is featuring Mark Skousen. He's the producer of FreedomFest, which has become an extremely popular annual gathering that deals with not only money, but other lifestyle topics as well. And so when you talk about freedom, what do you think of? What do you think of when you think of freedom? What is freedom anyway? Well, to me, it's the ability to choose what you want to do with your life. Okay? That's really what it is. The ability to choose. Freedom is the ultimate prize in life and can only really be achieved through financial independence. Let's be clear. You can be happy without being rich. You absolutely can. In fact, I think probably most of the super happy people in the world are not financially independent. Listen, you might have a job that you love and a life that you don't want to change, right? That's great. If that's the case, congratulations. But that's not the same as being free. Happy does not mean free, okay? So free is different, because what if someday you started hating your job and wanted to make a big change in your life? The question is, could you afford to follow a dream without being concerned about money? And the reality is that most professionals can't, and that's why high W-2 paid jobs are often called the golden handcuffs, right? So how do you break free from the golden handcuffs if that's something you want to do? Well, one of the key variables that I've talked about before in the mathematical wealth formula is that you must deploy capital, right? You got to deploy it fairly quickly into various investment strategies. You can't just sit on it in the savings account, because that is a guarantee to lose money. So I've always advocated for that. If you do that, you can start to chip away and start to change the balance of power between you and your money. You see, there's a balance of power there. Right now, money holds the edge. Money is driving you. And eventually you want money to work for you more than you work for it, right? It's a lot harder than it sounds, because achieving this kind of financial freedom, it isn't easy. It involves not following the herd, and it also involves not giving up. You see, no one has ever gotten rich from a simple portfolio of stocks, bonds, and mutual funds. Sure, they may grow your money a little bit and maybe provide some security in the future, or maybe preserve some of your wealth, but you simply cannot change your socioeconomic status this way. Getting rich involves taking bigger risks. Now, let me be clear. I have made my money through business ownership and real estate. Yes, I am a surgeon. I was trained as a surgeon, but I've made my money through business ownership and real estate. And candidly, have I lost money along the way? You bet I have. I absolutely have. But I have made more money investing in real estate and businesses over the last 15 years than I would have following the herd. And to be clear, I'm not giving you financial advice, right? Personal finance is personal. You got to do what you got to do. But I just want you to open your eyes and see the trajectory you're on and recognize whether or not it's going to get you where you want to be, right? If you want to be financially independent sooner rather than later, truly financially independent, I'm not just talking about, I am fire because I can, skip my Starbucks and live meagerly now. That's not what I'm talking about. I'm talking about, living a life that you want. If you want to get there, you are going to have to take some risks. I just want you to know that that is not an easy thing. It really is not. You're going to have good markets. You're going to have bad markets. There'll be times when you lose money. Right now, we're in a distressed real estate market. A lot of people are afraid, but right now is the time when people make money, right? So you got to use your head instead of coiling away and being scared. And if you want to be financially independent, you've got to go out there and actually make the moves. In the immortal words of former NFL coach Bruce Arians, no risk it, no biscuit. Now, with that wise advice, stay tuned for America's economist, Mark Skousen. Welcome back to the show, everyone. Today, my guest on Wealth Formula Podcast is Mark Skousen. Mark is known as America's economist. He's a university professor, investment expert, and the author of over 25 books. He's the author of the best-selling book, The Making of Modern Economics. Thanks for joining us, Mark.
Buck, it's a real pleasure. What do you want to talk about?
Well, gosh, there's so many things to talk about these days. Before we get launched on that, you're behind FreedomFest, aren't you?
Right. I'm the producer of FreedomFest. We've been doing it for about 17 years. We started in 2007, and it's been very successful. The idea is to bring together kind of like a Renaissance gathering. So it's not just politics, and it's economics, it's philosophy, history, science and technology, healthy living. We have the Anthem Film Festival. We have a financial conference, so a little bit of everything for everybody. Lots of breakout sessions and an exhibit hall and so forth.
And when is that this year?
So it's July. Actually, it's exactly a month from now. It's July 10th through the 13th at Caesars Forum Convention Center. This is a new convention center. It's across the street from Caesars. And if people go to freedomfest.com, they can get all the details. And it's a fairly low price conference. It's under $500 each, which is pretty cheap in today's world. And Vegas has really inexpensive hotels.
Yeah.
And it's a great conference. We have several thousand people who show up.
Yeah, it's actually something of it's become a pretty well-known event, and that's why I wanted to have people kind of get an idea of that right off the bat. Usually I do at the end, but I didn't want to forget. But well, Mark, there's so much to talk about right now. I feel like we're in an unusual economy where it feels like, I've been listening to a number of people talking about a disparity between what the numbers say and what people feel in terms of the economy. And I'm wondering if you have a good sort of reason as an economist to explain that disparity.
Yeah, so I think a lot of it depends on how the media portrays things. Like the other day on Friday, I think they showed the jobs growth of 265,000 or something like that. Like this was a really good jobs report. Well, it turns out that just to keep up with population growth, you need 265,000 people to get jobs. And so we're just keeping up with the population growth. Plus, I think inflation is much worse than what the media and the government is portraying. I think it's over 10%. You see so many products, even fast food restaurants and so forth, where the cost of living is rising rather dramatically, and people are feeling that pinch. The other problem is job opportunities for graduates. You would think would be really robust with the unemployment rate at 4% and so forth, but the New York Times just had an article on how difficult it is to get a job coming out of after you graduate this summer. So there's a lot of factors, I think, that are keeping people worried. That's why the data doesn't quite fit the way people are feeling.
Yeah. Yeah. And let's talk a little bit more about the data. I think you've talked a little bit about those measurements are made traditionally versus maybe how they should. I mean, an example of that might be GDP versus something that you call gross output. Can you talk a little bit about that?
Yeah, so this is my my own contribution to economics, to macroeconomics. So GO is gross output. GDP, a lot of people don't realize that GDP measures final spending only. So it's the shirt I'm wearing, the hat I'm wearing, all the technical stuff that you have, the books you have in the background, my totem pole in the background. That's all finished products, and that's added into GDP. If any of that is produced during the year, that's GDP. But what it leaves out is all the spending on the supply side, all the stages of production that are necessary to produce the final product. And there's huge numbers of business spending to get there. So gross output is more than double the size of GDP. It's like $60 trillion versus 29 trillion for GDP. And when you include it, and what you find in there, if you measure B2B spending, business spending on the supply chain, it's actually in decline. It was in the decline in the last quarter, not by much, but it was definitely a recession in the supply chain, and that's kind of a precursor, if you will, of where the economy's headed. So there's a lot of fear of recession. I think that's another thing that concerns people. They certainly are concerned about this election where you have two people, neither one the majority of Americans want, but they're kind of stuck with them. And
Yeah.
there's kind of an angst that you get when you don't have proper, real, solid leadership with two guys that are going to be either in their 80s or going to be in their 80s soon. So
Right.
I think there's a lot of those factors, but gross output, I have a website called grossoutput.com where I go into detail on it. And I did have a Wall Street Journal article in last month's journal on B2B spending and gross output, how it's not rising. It's anticipating a recession. And I think that does bother a lot of people. So GDP is positive right now, but gross output is headed in a downward slope.
Yeah, and so GDP, I think, correct me if I'm wrong, but you're effectively saying GDP is kind of a lagging indicator, and gross output would be sort of like what's happening sort of in real time. Is that fair?
I guess in the sense, yeah, because GDP is final output and GO includes the supply chain, and so the supply chain's telling you what's headed, what business is doing in producing products that eventually will be final output. So we do have, GO is a good leading indicator of what GDP is going to do the next quarter and the quarter after that. You'll notice GDP is stagnating. It's down to 1.3%, and GO predicted that with the B2B spending and the supply chain in decline.
I'm sort of curious about that. If you could, I'm sure you have statistics on this, like just, I mean, has it been pretty consistent in terms of like where GO's a correlation with GDP? I mean, can you follow it over a period of months and kind of show it fairly accurately predicts what happens with GDP?
Yeah, so GO comes out every quarter like GDP. Unfortunately, the government, the BEA, the Bureau of Economic Analysis, they don't put it out until 2 months after the estimate comes out for GDP. So
after which it becomes sort of GDP.
Even though it's a forecaster of
right.
GDP, it comes out 2 months later. And the BEA, it's a much more complex because you have to measure all stages of production. It's more difficult to calculate. But the BEA is doing the best it can. It hopes to, at some point in the future, to release GO and GDP at the same time. So GO is the top line in national income accounting. GDP is the bottom line. Kind of financial statements where you have sales as the top line and earnings as the bottom line. So the economists are finally getting caught up with the accounting and finance people.
Got it.
It's taken them decades. Centuries.
Let's talk a little bit more about inflation. You mentioned something in the order of 10%. How do you get to 10% in terms of your calculations on inflation?
Well, there is a site that does kind of a shadow inflation uh, and they tend to show actual inflation to be that is a full measure of cost of living. Tends to be about 2 or 3 points higher than what the government indicates in the CPI. And the reason for that is because the CPI does individual commodities and they weigh their pricing and their inflation based on how much you use on housing and food and all those sorts of things. And they don't include everything. For example, I use an accountant to do my taxes. Well, that's not included in the CPI. Housing, I mean, to what extent they have a rent figure, but they don't actually do housing per se. They don't include the income tax and what people are paying in the income tax. So this is a cost of living expense that's pretty substantial. They do include sales tax. So there's a lot of factors that are not particularly helpful for your standard of living or my standard of living, because it varies with each individual. And this is a very broad index.
Yeah.
And I just don't think it fairly reflects what's happening to individual behavior.
Yeah. So I think from the perspective of, I mean, that certainly would explain why people feel it more than it's coming out in CPI and CPE and all that sort of thing. But should the Fed be looking at these numbers differently than it does?
I do think that the shadow CPI is one that they should look at, and maybe they do. They probably don't do it officially, but these people do want to be alert. Their focus is primarily on what's happening to interest rates. And interest rates, by the way, are rising rather significantly with this stubborn inflation problem that for a while, I mean, Janet Yellen and others said it would quickly go away, and it hasn't. So I do think that's their primary focus rather than inflation per se. The focus is on can they reduce interest rates, which they want to do, but really can't at this point because the market's telling them that the rates, that inflation is stubborn, whatever the statistic is, and that's reflected in higher interest rates. Do you know that I mean, I just looked at this morning. The T-bill rate is at 5.3%. 10-year is lower, but and 30-year, the 4.4 to 4.6%. The mortgage rate is up to 7.4%, so it's going back up as well. So you wonder how long you're going to avoid a recession in the real estate market with these high mortgage rates.
Right, absolutely. Let's pivot a little bit because there is this, we've alluded to it already, but there's an election coming up between a couple of guys that no one wants to see, that the vast majority of the country doesn't really seem to want to vote for. But let's compare and contrast between those two. I'm sure we probably have a broad sense between Biden and Trump, and what is if you could talk a little bit about the differences, the major economic plans that you think are of impact between Biden and Trump.
So Biden's definitely a bigger spender. They're both big spenders.
Yeah.
There's no question about that. Trump was a big spender. He didn't reduce the national debt or the deficit. It got worse. And part of that is due to the pandemic. But there's no question the Democrats want to spend more and try to get away with it. So there is a big difference, I think, in the size of the deficits and the growth of the national debt. So they're both headed for a crisis. There is going to be a crisis in the budget, the fiscal policy of this country, as these interest rates keep rising, and that's going to cause the crisis to occur. Because right now, the interest on the debt is now more than the defense spending, and you're already hearing cries, wow, we could, instead of giving all this money to bondholders, which tend to be wealthy individuals and institutions, we could be spending this money on welfare and global warming and all these and inequality issues and that sort of thing. I'm also concerned with the Biden administration's excessive ideology on the global warming issue, which they is in many ways a manufactured crisis, is constantly saying that everything's getting worse, that the tornadoes, the hurricanes, the fires, whatever they want to name, it's getting worse. Well, I've lived a long time, okay, and there's no change. There's no change. The tornadoes, the hurricanes and stuff, these occurred years before. The seas are rising barely. I've been to both coasts on the seas of both coasts on the beaches, and there's some erosion, but it's really relatively small. And in fact, many areas, the actual islands are growing because of reclamation and all the different things they're using to make to make the actual usable land larger, even in Florida. So I am concerned about the EV mandates, that you have to have all electric vehicles by 2035, and the constant effort to pressure manufacturers into producing cars that people don't want. They're not as convenient. There's all kinds of problems mechanically with these automobiles, the EVs. So the hybrid is a much better choice, but they won't go for the hybrid because it includes some emissions. Those are just some examples. Regulation in general is definitely antitrust, and there's another area where they're constantly going after businesses that are merging and M&A activity, trying to stop efforts to companies to become more efficient by merging. So there's a lot of problems. They want to raise taxes, the Democrats do. The biggest problem on the Trump side, of course, is that he is going to be so wrapped up in his own personal fights with the federal and state governments that is he going to be able to govern much at all? Maybe that's a good thing. I don't know. And I also don't like his America First protectionism, his advocating a 10% across the board protectionist tariffs and that sort of thing. It's one thing to go after China, but it's another thing to impose these tariffs on all goods and services. That's just a tax increase. There's nothing more than
maybe you can explain that, because I think that's an important point where the tariffs are, in effect, they're penalizing the American consumer, right?
Yeah, and so if you're worried about inflation, you're going to see a rather significant rise in prices and costs of production, supplies, in the supply chain as well. We import a lot of raw materials and semi-raw materials that have to be finished. All of those prices are going to go up. He has to go through Congress to get this done, but it is kind of a sad commentary that Republicans that used to be very much free traders are now moving because it's all about policy. And you get these different ideologies based on personalities rather than commitment to certain principles.
I'm curious a little bit on that too, Mark, since you brought it up. I grew up in a household where my parents were immigrants, but I remember them being so in love with Ronald Reagan back in the 80s and 1980 and 84, and most of the country was. And you look back at the Reagan politics, and especially when it comes to free trade and that sort of thing, I don't think he could probably even win the Republican primary at this point, given his political stances. Do you think that that's an evolution that you've seen? I guess what I'm curious is, like, what's your take on the way parties have changed and what the implications of that are?
Actually, I don't think that there's been that much of a change. I think what you're seeing is, I think Ronald Reagan would win re-election very easily and get the Republican nomination. It's all personality driven, and the Republicans are just, the MAGA type people. They like the rhetoric, they like the Donald Trump in your face, I'm going to drain the swamp, being an outsider. People find that very attractive. But basically, I think most Republicans still want limited government and a balanced budget and those kind of traditional views. Free trade has always been a bit of a controversy, even among Republicans. I mean, after all, the Smoot-Hawley Act was put forward by Republicans. And Ronald Reagan himself, he imposed tariffs on Japanese cars as well as Harley Davidson, trying to protect Harley Davidson by avoiding the competition from the Japanese Hondas and so forth. So there's a mixed story in that regard. But we economists, free market economists, and in fact most economists advocate globalization and open borders in terms of goods and services that have to pass through there. Not necessarily labor. There's another big difference right there is on immigration, because there's no question that Biden and the Democrats want open borders and want all these people to come in and become Democrat voters and stuff. I mean, it's just,
right.
I think it's really a sad commentary on the Democrats in that respect.
When you think about the policies in this year's elections that impact listeners who, let's say they've built considerable wealth and real estate and stocks and all that kind of thing, what are those things that people should be paying attention to?
Well, I think the stock market is a pretty interesting indicator. We see it right now near all-time highs. So that's actually favorable for the Democrats winning re-election. If you get a bull market on Wall Street the last 6 months prior to an election, that's favorable toward the incumbent. However, in terms of actual inflation, if you look at the stock market in terms of beating inflation, it really hasn't moved much higher since 2021. So while nominally it looks pretty positive, the fact is it's not doing that great. People need, these 401k plans need to be a big success, because Social Security is an inefficient way to fund your retirement. I mean, I'm on Social Security and I get $4,000 a month, but if I had had my money invested in the S&P 500, I'd be at $12,000 a month.
Sure.
I mean, that's a huge difference.
Right.
And we don't do that. We have our Social Security retirement accounts invested in T-bills, which for 10 years was getting no return.
Yeah.
So you can see why we're building toward a crisis of the unfunded liability problem and stuff.
Right.
So that's something to be concerned about. I'd also be concerned about the government constantly taxing wealthy people indirectly through their 401k plans and IRAs and stuff. I'm sure maybe you're not familiar with RMD. Do you know what RMD is?
I should, but I'm not.
Required minimum
okay. That's right. Required minimum distributions. You got it.
These are ways for the government to get their money back early, because a lot of people, including myself, don't really want to take the RMD.
Sure.
But I had to take over $100,000 out of my account that became taxable just.
And that starts at 65. Is that right?
Pardon?
When does the RMD start? At what age do you have to start withdrawing from your?
72,
72.
I believe, is when you have to start taking it out, and it becomes taxable. And this, by the way, was signed by Ronald Reagan, the TEFRA legislation in 1982 that Robert Dole, Mr. Senator Tax, pushed through. Nobody cared at that time because it wasn't really an issue, but now it's a major issue, and it's so entrenched in the system that it's going to be a drag on the economy. My basic thesis, we've entered a stage of stagflation in this country. I mean, Trump might be able to reverse that if he deregulates and really cuts taxes, but also needs to cut government spending because it's so wasteful. Department of Education is a classic example, right? Is there anything that you can point to say, hey, now there's a success, the Department of Education? Because it all goes into bureaucracy. It does not really filter down to the individual student, as far as I can tell. My wife and I both teach at Chapman University. We've worked with the government. We've worked with the Department of Education. They put in all kinds of rules and regulations. They have a huge staff. It's totally wasted money, and the Republicans constantly say, well, we're going to end the Department of Education. They never do. I mean, it's after a while you become jaded with what government promises. Donald Trump says, I'm going to drain the swamp. Instead, he swam in the swamp in many ways. I mean, some deregulation occurred, but he didn't really reduce the size of government, I don't think.
Yeah. Let's finish with this. Obviously you talked a little bit about Freedom Fest to begin with. What inspired the concept of Freedom Fest for you in the first place? Because obviously it's a commentary on the way you think times are headed right now.
Yeah, so Freedom Fest started in the early 2000s when I thought we were gradually losing freedom. If you look at the Economic Freedom Index, the U.S. Economic Freedom Index has been declining now for almost 20 years. And now we're like 25th in the world and so forth. And so I thought, how can we reverse this? Not that we have, but at least that was my idea, is why don't we have a international gathering of all the freedom lovers where we will network, we will learn from each other, we will network, we will socialize, and we will celebrate liberty. So that's really the idea, and we attract several thousand people from all over the country, all over the world, and we have authors, professors, scientists, economists, political thinkers, healthy living experts. I got Steve Forbes and John Mackey, the former CEO of Whole Foods Markets, to be our co-ambassadors. Kennedy from Fox News comes every year. But we try to attract people with an open mind who want to learn new things. We have lots of debates. We have mock trials. We have celebrity speakers to attract a large audience. We had William Shatner. We've had George Foreman. We had Kevin O'Leary of Shark Tank. We had Mike Rowe last year. We had John Cleese, the British comedian. And this year we have Steven Pinker, the Harvard psychologist. We always try to get a really nice group of people coming together. And people walk into that exhibit hall, which we call the Trade Show for Liberty, and it's a one-stop shopping for liberty. You have all these freedom organizations like Reason and Cato and Heritage and Students for Liberty and FIRE and so forth, FEE, and we have a financial conference there. So because financial freedom is you got to have investing, you got to be successful financially in order to really maximize your freedom. So that's the idea. We've held it every year in Las Vegas until the lockdown, and now every other city, we go to another city every other year. So we've been in South Dakota, Mount Rushmore a couple years ago. Last year we were in Memphis. Next year we will be in Palm Springs, so we're really excited about that. And then this year we're going to be in Las Vegas, July 10th through the 13th. So people should go to freedomfest.com and get all the details. It's filling up pretty quickly, so it's a month away.
Fantastic. Mark, thanks so much for being on Wealth Formula Podcast.
Yeah, my pleasure, Buck. Real pleasure.
Welcome back to the show, everyone. Hope you enjoyed it. No risk it, no biscuit. I love saying that, by the way, and it's so true. Listen, I just want to remind you, if you have not done so and you are an accredited investor, you may want to join the Accredited Investor Club. There is some serious activity going on in there right now. If you are an accredited investor, go to wealthformula.com and sign up. We have some potential real opportunities in the distressed real estate. As we discussed earlier, this is a market where even though, the equity markets and stuff are doing pretty well because of the interest rates and such, real estate has got some real buying opportunities. So if you want to participate, at least check those kinds of things out. Get onboarded with the Accredited Investor Club at wealthformula.com. That's it for this episode of Wealth Formula Podcast. As you know, we have a Wednesday and Friday episode as well, so stay tuned for those, and I'll see you next week.
Thank you for listening to the Wealth Formula Podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, consult your own financial team before making any investment. See you next time.